You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 7th day of November, 2022. Hope you had a great weekend. I did. Those of you who have access to the Breeze channel saw it live in real time. So, to my nephew, Josiah, and his beautiful bride, Mary, I wish you all the very best. Pray that you will truly live happily ever after. All right. Thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live training room from 9:30 a.m. to 11:30 a.m. Eastern. Of course, that is restricted for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, in a few minutes, Michael will show you exactly how to do it. There's no credit card required. You'll have access to everything a lifetime member has for an entire week, except for the Thursday night members only workshop. At 11:30 a.m. Eastern each day, we take a 30-minute break, and then we come back for the afternoon broadcast, the one you're listening to or watching right now. This broadcast is open to the public, everybody, everywhere. There's 2 different ways to join the afternoon broadcast, one a little better than the other. Let me give you the best way first. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and then every trading day going forward, you'll receive an email right before the broadcast starts. All you have to do then is click the link in the email, and it will automatically log you into our platform, and that gives you access to the question box, so you can ask questions and participate in the discussion. That's what makes it the better way. Now, there'll be days you're out of the office, away from your desktop, maybe on vacation, whatever the case, but you still want to join the afternoon broadcast live. All you need is an internet-connected device from anywhere on planet Earth. With a phone, a tablet, a PC, or a Mac, all you have to do is point your browser to youtube.com/CFRN. You gotta admit, that's pretty easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, we have over 2,100 daily live broadcasts archived for your educational and viewing pleasure. So with that said, let's open with a word of prayer. Now, last week, we talked about fear. We've talked about man's anxiety over money. We've talked about God's view of money over the last few weeks. We've talked about faith. And last week we talked about fear, one of the most powerful tools the enemy has. So powerful that we're going to continue in that vein today and tomorrow before we move into a new topic. Our scripture for today, Luke 6:36, from the Message translation. I tell you, love your enemies. Help and give without expecting a return. You'll never, I promise, regret it. Live out this God-created identity the way our Father lives toward us, generously and graciously. Even when we're at our worst, our Father is kind, so you be kind. Now, fear shows up in many ways. Could be the knock at the door, the ring on the phone, the envelope in the mailbox that doesn't look like Grandma sent you a Merry Christmas letter. And it might lay on your desk for days. You're paralyzed with fear, unable to open that envelope. Got to rise above that. Now, this is a leap, but we're going to go from what I just said to our struggle to forgive. You see, forgiveness and fear are intertwined. The forgiveness God offers us is beyond our understanding. Our good God has forgiven us for all of our sins, past, present, and future. Even though we don't grasp it, we certainly want to accept it. Yet when someone does something to hurt, wound, or offend us, it's not quite as easy to forgive, is it? We should be people who not only receive God's forgiveness, but extend it to others as well, even our enemies. Pray with me. Heavenly Father, you don't deal with us according to our sins or repay us according to our iniquities. Thank you. You're compassionate, gracious, slow to anger, and abounding in love. You've given us redemption through the blood of Jesus and the forgiveness of sins according to your rich grace. We have all sinned and fallen short of your glory. While we were still sinners, you sent Jesus to die for us. Therefore, we will be kind, tender-hearted, and forgiving, just as you forgave us in Christ. God will bear with and forgive others who have hurt us. Will be merciful as you are merciful. In Jesus' name we believe and pray. Amen. And everybody said amen. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Once I do that, Michael will join us. He'll give us a recap of what happened in the live training room. After that, I'll come back and we'll look at the Logic 247 alerts for the week, the Concierge Trade alerts for the week. Now, you go, but it's only Monday. Yeah, but futures start trading Sunday night at 6 p.m. Eastern. And of course, as I forewarned everyone, I had to attend the wedding feast, and so it was a little bit later than normal that I got out the logic alerts and the CTAs, but the weekly trading zones did come out on time. We've published the weekly zones every week for our members since December 14th of 2009. They come out at 6:15 a.m. Eastern. Now, I'm in Arizona where we don't do daylight savings time. So, for part of the year, the Wall Street Open is 6:30 a.m. my time. But now we're in that sweet spot where the Wall Street Open isn't until 7:30 a.m. my time, which is a good thing, except I've gotten a habit of waking up early, so now I've got to retrain my brain that I can sleep in for the next 4 months. Okay, here we go. Again, starting in the U.S. with the indices. The Dow's up 195 points, but the NASDAQ is down 21. S&P 500 is up 5, but the Russell is down 1.5 points. Obviously, divided markets. The four major indices, as futures traders, we like to see all green or all red. We don't care which. We just like to see them all the same color, because that gives us some of our best high probability, low risk trade opportunities. When the markets are divided as they are today, that creates for some choppy sideways conditions, which I'm not surprised to see since we have the midterm elections tomorrow. The Dow and the S&P are in the green, but the NASDAQ and the Russell are in the red. In the commodity basket today, crude oil is up 39 cents, make that 41 cents, trading 93.02 last. Gold is up $4.30, trading 16.80 last. And silver up 14 cents, trading 20.93 last. In the Asian markets at the close, Nikkei posted a gain of 227 points. 327 points, which is 1.25%. Shanghai posted a gain of 7 points. The Hang Seng rose 434 points, which is 2.75%. And in the European markets at the close, FTSE down 34, the DAX up 73, the CAC unchanged on the session. So that gave us a green day in Asia, a mixed day in the UK, and as already mentioned, it is a mixed Radio Monday here in the US of A. So with that, we'll go to Michael if he's ready and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, just type it in the question box. We'll be happy to answer it for you. Michael, I can see your charts.
All right.
Take it away.
Here we go. Good afternoon, everyone. Today is Monday, the 7th day of November, 2022. If you have not taken a free trial with us and you want to take a free trial with us, then, hold on, let me scroll up and see. No, then go here. Go here to My Trading IQ. Right here says grab a seat for 5 days of trading and training. Click on that and you'll be brought to this page. No. This page, yeah, this page. Fill out this form and then you'll be sent all the information you need to get into the room in the morning. Okay? That's all you have to do. You'll be sent all the information you need to get into the room in the morning. Now, if you're going to bother to take the free trial, you should go here, download the platform, whatever platform you have. If you don't have any of these platforms, then download DT Pro, because that's what I'll be using. All right. If you need any help with any of that, email us support@mytradingiq.com, and we will get back to you as soon as possible. All right. Now, you should also take a look at the trade handout. These are the rules for the trade setups. This is exactly what I follow in the room every morning. All right. Every morning, the same thing over and over and over again. You can watch some of these videos. They are videos of me doing that, following those rules over and over and over again. All right. So we'll get into the results now. If you are going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 7th day of November, 2022. We made 34 ticks in crude, 16 ticks in gold, and 14 ticks on the ES. That put us at 675 on the morning session. Okay, today it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 18 trades this morning. So on the month now, we're at $5,420 a contract. That's over 5 trading days, averaging $1,084 per contract per 2-hour trading day. On the year now, we have gotten our goal on 211 out of 211 days, and we've gone 272 days since our last negative day in the room. Those are business days. That puts us at $213,248, averaging $1,010 per contract per 2-hour business day in the room. If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, you now would have had to work a total of 33.5 hours on the year, 33.5 hours so far on the year. That means you would have averaged $4,753 per hour on the year. Be trading 11 contracts right now. Okay, that's where we want you all to be. Now, let's get into these trade setups. Gold did give us some good opportunity today. Gave us some opportunity, good opportunity. Gave us a little bit of opportunity today. The markets weren't all that giving today. But this was our moment in time. There was a short trade right before the moment in time, which was right in here. And then I was saying during the moment in time that gold was the only market that was really giving us anything. Looked like it was going to give us anything. And I thought it was going to pull back up to this line right here, and it did. And then I said it'll probably push down to this level down here, and it went right through it. That was the moment in time. After that, we took a trade over here on gold. We picked up 10 ticks on the first one, and somewhere we got 6 more ticks somewhere. I don't know where it was, but we got a break even, a plus 10, and a plus 6. So somewhere in here, I picked up another 6 ticks. I think it might have been right in here. This may have been the first one, and that one was the second one, I think. I'm not exactly sure, but I could go back and look. Since then, there were no other trades on gold, right? Crude oil was our big winner today, I believe, right? Yeah, it was. In crude, now, and in crude, let me go back over here where we are currently right now. We sold off from the end of the session this morning. What I was saying this morning is if we closed that period above 93.70, it would be really bullish for crude. If we didn't close that last half-hour period, not the one that ended at 12, but the one that ended at 11:30, if we didn't close that one above 93.70, that it would be bearish for crude. So you can see right now, crude has dropped all the way back down to the MA1, which Dwayne calls blue and climbing. It's dropped down to that, and when it breaks through that, if it breaks through that, it should go down to the BBC and then probably continue on down. I would think that the level that it should drop to would be right here, right at the BBC right now. So it should drop down to about 92.30 over the next hour or so by the end of the day anyway. Anyway, that's big picture stuff. In my world, here in the 7-tick range, we started off with a mistrade right here. Well, a mistrade here, then a mistrade there. And then this was a moment of time. I didn't do anything with that. Finally, I took my first trade right here and picked up 28 ticks on that one. Then I stopped out. That put us back down to 18. Then I had a couple of ticks that put us to 20. Then a break even, and then 14 ticks to get us to 34. That is where we ended it for the morning session. There was one more trade here that worked out well. and another one right here that worked out well. I don't know why I didn't take those, but for some reason I didn't. And during the break, red off a red and blue off a blue, we don't have any. The market seems to have slowed right down, guys, with the midterms coming tomorrow. Well, again, tomorrow we're just going to have to get in there and make money early tomorrow, because I suspect it's going to, I don't know how volatile it's going to be. You know, and the results probably won't be final for weeks. There's going to be so much, who knows, after the last election. I have no faith in any of it. But anyway, the ES now. Our first trade here was a break even, and our next trade right here, this is where we got the goal for the day. We picked up 8 ticks. We had another break even, then another 8 ticks, got us to 16, then another break even, and then another break even, and then this was the moment in time. In the moment in time, I had no idea what it was going to do, but I thought if it's going to go down, it should go down to this level right here, which it did, and then it should probably bounce up to this level right here. And that was based on some 30-minute magic that was going on in here. At the time, we were bouncing off of the BBC right here. All right, we're bouncing off the BBC right in here. And I was thinking as it bounced off, it'll probably try to get back up to this level that I drew in here. It never got all the way up there, it doesn't look like. That was 38.05. And it doesn't look like it ever got up to 38.05, did it? No. Okay, well, it did move up though. But that was the moment in time. At that time, the moment in time, I was looking at this number up here, right? That's what I was thinking. I wasn't looking all the way up at, I guess it is 38.05. So I was looking at that in a minute. And well, you can see it gave some trades through here during the moment in time. And our next trade here was a break even. Then we had to bounce off the BBC here and over here. Let's see, at this point, we were at plus 16. And then we got 8 more to put us at plus 24. And then we stopped out right there to put us back down to 14. And that was where we ended it for the morning session. Now, this happened right as the break started. There was one trade in here, one right there. And that was it. It really didn't have much at all. Maybe one more trade right here that went about 6 or 8 ticks. That was it, guys. Trading has not been easy today compared to normal days. And following the rules. It was pretty simple to follow the rules. But let's go back to the spreadsheet. Here it is. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 7th day of November, 2022. We made 34 ticks in crude, 16 ticks in gold, and 14 ticks on the ES. That put us at plus 675 in the morning session. Today it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 18 trades. So that puts us at $5,420 per contract on the morning session. That's over 5 trading days, averaging $1,084 per contract per 2-hour trading day. On the year now, we've gotten our goal in 211 out of 211 days, and that puts us at 211 out of 211 days, and that puts us at $213,248 on the year. All right, averaging $1,010 per contract per 2-hour business day. Okay. If you were to quit trading and you added 1 contract per month, you would now be trading 11 contracts, right? Now you add 1 contract a month based on your profitability. You got to make $2,000 per contract to add another contract the next month, right? So just multiply all those times 2. Like last month, we would have had to make $22,000 to be able to add another contract for this month. Actually, last month we would have had to make $20,000. This month we have to make $22,000, and we're well on our way to making $22,000. Now, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you've only had to work 33.58 hours and you would have averaged $4,753 per hour. Now, let me go over that really quick for you. So far this month, we're 1, 2, 3, 4, 5 days in, and we're 7, 10, 13 minutes it's taken me to get my goal so far, right? 13 minutes taking me to get my goal so far this month. And if you were to add all these up so far this month, $650, multiply that times 11. Let's see, let's do that here. bring a little calculator over and do 650 times 11 equals that. Now, I have not worked a total hour yet. So on the month, I have not worked a total hour. And so far, we're at $7,150 quitting when I get the goal for the day. If I had 11 contracts on, that's where you want to be. All right. So far this month, what have we worked? 7, 10. We haven't even worked 15 minutes. 13 minutes so far. So divided by 13, it's $550 a minute. That's where we're at right now on the month. All right. That's where you want to be, isn't it? You want to be consistently profitable, adding contracts when you have the confidence to add the contracts and you've reached the ability to add the next contract monetarily. You've made $2,000 per contract, so you can add another contract, and then quitting when you get your goal. Doesn't that make more sense than sitting here trading all day? No, today I ended up with $600 and something, and I ended up placing, how many trades did I say I took? Overall, 18 trades. But after 2 trades, I was up 100. So it took 16 more trades to add on that extra $500 or $575. You don't need to do that. I have to do it because I'm in there for 2 hours every day training, but you guys don't need to do that. All right. All right. So with that, I'm going to go back here. Here. If you've not taken a free trial with us, then go here to mytradingiq.com. Right here it says grab a seat for 5 days of training and trading. Click on that and you'll be brought to this page right here. Fill out this little form and you'll be sent everything you need to get into the room in the morning. Okay, that's all you have to do. Do that and be able to get into the room in the morning. If you're going to take the free trial, you should go here to mytradingiq.com. Right here it says platforms. Download the platforms. Go to trade handout. Look at the trade setups. Go to videos. Watch the trade setups in real time. And that's all you have to do. All right. If you have any questions about any of this stuff, then send us an email at support@mytradingiq.com. All right. Support@mytradingiq.com. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, you are ready. It looks like you are.
I am ready.
Okay.
And guys, I just want to say this. What Michael just said there at the end of the recap, okay, when he broke it down to the amount of time spent to reach the goal for the day, he almost made it look easy. I assure you it's not easy, but it can be simple. Well, how does it become simple? Well, you follow the rules, you ask lots of questions in the live training room, and you book one-on-one mentoring sessions, which as a passport holder, you have unlimited access to one-on-one private mentoring. It'll never be simple because it's trading. It'll never be easy, but it can be simple. And that's how it becomes simple. So, recap of the recap.
Today, it took 3 minutes and 2 trades to get to $100 per contract.
Good job.
Thank you.
Okay. Tell you what, I'm going to give you guys a couple headlines. And then we'll jump into the recap of Logic 247 and the concierge trade alerts. And let me refine my spot on my, yeah, here we go. All right, these are headlines. I didn't write them. Republicans and Democrats made final campaign pushes over the weekend ahead of tomorrow's midterm elections, with Republicans poised to take control of the House and even possibly the Senate. President Biden campaigning Sunday in New York for Governor Kathy Hochul warned that a GOP victory could weaken democracy. I'm not even going to comment on how ludicrous that statement is because you get it. Former President Donald Trump, speaking in Florida, blamed Biden for violent crime, inflation, and other problems. I don't need to comment on that either because, well, You've been to the gas pump. You've been to the grocery store. You've been afraid to take a walk around the block at night or even go shopping in downtown New York City. So I don't need to comment on that. Senator Amy Klobuchar, everyone's favorite Democrat from Minnesota, and Transportation Secretary Pete Buttigieg. Now, the Transportation Secretary, what experience does he have? Well, he rides a bicycle. He takes public transportation. He has been the mayor of a small town. But he's the Secretary of Transportation. Okay, never mind. Both of these folks I just mentioned were former presidential hopefuls campaigning in New Hampshire on Sunday for Senator Maggie Hassan, whose tightening race against GOP challenger Don Bolduc is one of several that could decide control of the Senate. So I want to encourage you, no matter where you are on the political spectrum, Democrat, Republican, Independent, exercise your right to vote. Please. Even if it goes against how I'm going to vote, I want you to exercise your right to vote. Why? Because I want you to personally take responsibility for what happens over the next 2 years. Ukrainian President Zelensky warned Sunday that Russia was preparing mass attacks across Ukraine, targeting infrastructure, especially the power grid. Russia has focused on drone and missile strikes against power stations and other key facilities as the Ukrainian counteroffensive has driven Russian forces out of some occupied areas. Talk about the underdog. You know, knocking out the champ. I mean, this is blowing the odds makers away in Vegas. Nobody thought Ukraine could stand up. Now, the fact that Ukraine has stood up to Russia and has had some success at the cost of many lives, which is tragic. No one thought that could happen. They've defied the odds. They've shown the strength of the human spirit to stand up for what is right and for what is true. Should American tax dollars fund that? I will save that discussion for another day. Russian and Ukrainian officials said the Black Sea port city of Kherson lost power when a high-voltage power line was destroyed. Both sides are preparing for a major fight for control of Kherson, which Serbian President Alexander Vučić said could be the decisive battle in the war in Ukraine. So while I don't want to get into whether we should fund it, not fund it, if it's our business, not our business, I pray for the Ukrainian people. Okay? Not so much the government, not elected officials, but just the people like you and I, who all they want to do is work, put food on their table, raise their family, raise them up in the way that they should go. Those are the people that I'm praying for, and I hope you will too. Russia's secretive Internet Research Agency, the IRA, in St. Petersburg, which interfered, supposedly, allegedly, that's the word, in the 2016 and 2020 presidential elections, is using social media posts to stir up anger, this time aiming to chip away at support for the Biden administration's military aid to Ukraine. The post mostly denigrated President Biden and other prominent Democrats, sometimes obscenely, according to the old gray lady, the New York Times. They also depicted Ukrainian President Zelensky negatively, in line with Russian propaganda. It's clear they are trying to get them to cut off aid and money to Ukraine, said Alex Plitzis, an Army veteran and former Pentagon Information Operations official, now working for the business technology company Providence Consulting Group. The UN has kicked off the COP27 climate summit in Egypt. I refuse to even talk about climate change. Now, this hits close to home. Election workers in Arizona hotly contested Maricopa County received at least 140 threats and other hostile communications as the midterm elections campaign intensified in late summer. Reuters reported Sunday, citing 1,600 pages of documents the news agency obtained through a public records request. The threatening messages to the county election office between July 11th and August 22nd included such menacing lines as "you will be executed" and "wire around their limbs and tied and dragged by a car." Are there lunatics in every party? Yes. Many of the threats cited former President Donald Trump's unfounded claims about various forms of fraud, including fake ballots and tampering with voting machines. Other jurisdictions around the country also experienced similar threats. You know, it doesn't take a rocket scientist to see that a president who didn't even campaign got 18 million more votes than the chosen one, the Messiah, Barack Obama. I don't even need to say any more about that. North Korea's military said Monday that its unprecedented recent flurry of missile tests were practice for strikes on South Korea and the United States. So they've openly threatened us. The little rocket man, as Trump so called him, this is kind of serious. The simulated attacks came as South Korea and the U.S. conducted 6 days of joint air drills that ended Saturday. North Korea's military said the exercises were an open provocation aimed at intentionally escalating the tension and a dangerous war drill of very high aggressive nature. The North last week fired dozens of missiles, including one suspected intercontinental ballistic missile. If you don't know what that is, it's one that could hit America. Okay? And sent warplanes over the sea in protest of what it said were enemy drills to practice an invasion. Why would we invade North Korea? They got nothing we want, except to take away their nuclear power. People there are starving to death. But Rocket Man, he hasn't missed a meal, in case you haven't seen him lately. Facebook parent Meta Platforms is preparing broad layoffs as soon as Wednesday. The Wall Street Journal reported Sunday, citing people familiar with the matter, The move would mark the first time the company has ever made large-scale layoffs. For those of you that don't know, Mark lost about $100 billion, I think it was, last week. Sorry that happened, Mark. No, I really am. It would be the latest in a series of cutbacks at major technology companies that experienced rapid pandemic area growth. Meta had more than 87,000 employees at the end of September. So even though it won't lay off as large a share of its workers as Twitter, Elon's not laying people off. He's flat out firing them. Okay? Which affected roughly half of the social media company's employees in recent days. Meta's layoffs could be the biggest yet this year for a major tech company in terms of number of jobs lost. And that's it for headlines. The next one has too many names I can't pronounce, so you have to go read them for yourself. Michael Laura, he may have said that, but I probably shouldn't repeat it, so just in case. I don't want that ICBM pointed at my house. All right, let's get on with what you actually showed up here for. And that would be a recap. As those connected to our Breeze channel know, and our members only channel, I was at a wedding feast yesterday. And so I got home late, but I promised I would do my best to get out some CTAs, some logical alerts, and I did promise that the weekly trading zones would come out on time, and they did. So here's what's happened not since the markets opened at 6 p.m. Eastern last night, but since I got home about 11 p.m. Eastern. 18 total alerts issued, 0 never triggered. Still waiting on 4. That gave us 14 actionable alerts, of which 3, or 21%, would have been stopped out based on not risking more than $300 per contract per trade based on market structure and a very simple 3-step process that we teach each one of our passport holders who bothers to book a one-on-one mentoring session. Okay? Now, still got 4 waiting, so that can change all of this dramatically, for good or for bad. But we're in week 223 of Logic 247. And as of this morning, we issued alert number 12,328. Now, it's important that you understand the logic alerts are posted well ahead of the trigger, okay? So that all of our members have a chance to study the alert, study the chart, because our goal is to teach you to become a self-sufficient trader. We want to get you to the point where the chart tells you when to get in and when to get out. You don't want some person, some disembodied voice on the internet telling you when to get in and when to get out. You want to be able to read the chart and know when to get in, when to get out. Okay? So, our last alert, 12,328. Each one individually handcrafted. Okay? So we're still waiting on gold. We had a long on crude. We had a long on the Dow. Still waiting here on the Russell. Still waiting here on the ES. Bonds. 2 stop outs on bonds back to back. Yikes. Stop out on the euro. Long on silver. Long on gold. Long on crude oil. Long on the NQ. Long on the Russell. Long on the Dow. Long on the ES. Now, here's something I need you to understand. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Because the market has a memory and it loves to repeat itself. Whether it's a logic alert or a CTA alert, if it triggers, there's a higher probability of it triggering multiple times than not triggering multiple times. Now, the logic alerts are based on current price action, and they are published around the clock, 24/7 from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, because the markets trade around the clock. Now, I had a question this morning in Telegram from William B. about the gap open across all the markets last night. William, you talked about the London Open. I don't know if there was a gap at the London Open, but I believe across all the markets, and again, I wasn't at my computer, I was at a wedding feast when the markets opened. So we're going to walk through the individual markets in a few minutes, and we'll see where those gaps are. Now, along with the logic alerts, which again are based on current price action and are published around the clock, we still have our original alert service, the concierge trade alerts. They are based on historic price action and are published only once per session, shortly after the Globex Open. So Globex opened last night at 6, so on a typical Sunday night, this would say 6:30. But because of everything I explained, these didn't get published until 11:55 p.m. Eastern last night. So there's only 2 hours between me and the East Coast now for 4 months. 8 months out of the year, it's 3 hours. So I got to get my whole self readjusted to this. I've already changed all my charts. My charts reflect East Coast time. Now, when this static report is published, you probably don't trade all of the markets, but whatever markets you do trade, you should make note of where price is at this point in time when the report is published. Because from this point forward, if price starts trending up towards 37.92, that is bullish. So our strategy will look for opportunities to be long the market. On the other hand, if price starts trending down towards 37.49, that's bearish. So our strategy will, by nature, look for opportunities to be short the market. In either case, that's where you're going to use Logic 247 and everything you learn in the live training room every single day to yourself find opportunities to be long or short the market. When this report is published, for whatever markets you do trade, not only should you make note of where price is at this point in time, but you should draw a line in the sand using the ES as an example at 37.92 and draw a line in the sand at 37.49. And as we go to the individual markets, you'll see those lines in the sand. Okay. But first, we're going to start with the daily chart, as we do each and every day. Last night, I mentioned that the market was up against resistance times 3. Okay, see this little line here? Right here. Okay. This is the 24% fib extension. That's 1. Step line is 2. Daily BBC is 3. Resistance times 3. If price can overcome the high of the day, it's going to run into resistance again. Right here at the 38% reverse fib of the last leg down, and at the high of the fib extensions that we drew. And then you got red and falling. When red and falling shows up, here's what typically happens. When blue and climbing shows up, that's what typically happens. See this? See this? Remember, trading's not easy, but we've been working since 2008 to make it as simple for you as we possibly can. Okay? So price is kind of stalled out right here at that resistance times 3. Where we close today will be important. It would be more important if we closed below the low of the day. We would have support here, potential support, and then potential support here. If we move higher, we've immediately got resistance, 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 resistance. I'd much rather see the market drop than move higher. Now, if you're an investor, you got a 401k, that type of thing, you want to see the markets go higher over time. And I promise you, over time, they will if you own an index fund, because that's how the indexes were created, to always go higher over time. The S&P 500 is 500 large cap companies. And anytime one of those companies gets a little weak in the knees, they boot it and replace it with a strong bull that meets all the qualifications of the Standard & Poor's board, who decides who gets in and who gets kicked out of the S&P 500. Now the same is true of the Dow 30, the Russell 2000, and the NASDAQ 100. Over time, they're always going to go high because the weak ones are booted and replaced with companies that are moving higher. And you might think, wait, that's rigged. Okay. It's also a way, if somebody had told me when I was 21 years old, was there actually an S&P index fund when I was 21? I don't know. But if somebody had told me that if I would just plow $100 into that thing on the long side for the ensuing 40 years, we'd probably be having this conversation from the back of my yacht. But nobody told me that. So if you're young and you have a large window of opportunity, a large window of time before retirement, okay, that's not a bad way to go. It really isn't. Just plow $100 into the S&P index fund every week, whether it's up, whether it's down. It's called dollar cost averaging, and over time you're going to come out way ahead. Because the market, no matter how far it drops or draws down, look at 2000, look at 2007, it recovers for the reasons I just mentioned. Now, many of us in this audience don't have a huge time horizon, okay? Many in our audience are already retired. And so what we do here at CFRN is we teach you how to trade intraday and around the clock with futures to make up for the fact that you didn't buy an index fund when you were 21. Okay? Not easy, but it can be simple. If you follow the rules, if you follow the blueprint, it can be simple. Caveat. All the stuff you have that has cost you tens or even hundreds of thousands of dollars over the last decade, all the stuff that has cost you time and treasure, that landed you on our doorstep looking for help, get rid of it. Okay? Now, I mean, you don't have to delete it or destroy it, but get it off your screen. Get it out of the picture, because it's only going to muddy the water, because what we're trying to teach you is something so simple, something that repeats itself over and over again and again, day after day. You might say, I don't trade futures. That's okay. Our methodology and strategy and the indicators that you own for life when you become a lifetime member work fluidly across all markets and all time frames. Not just futures, but individual stocks, crypto, forex, from a 1-minute chart to a monthly chart. Price flows the same. If you never hear anything else I say, write this on the tablet of your heart. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in existence since the inception of the markets. It will remain in existence until the markets cease to exist. Now, some people by nature, they want magic. They want some formula, some string of numbers, some kind of predictable behavior. Okay? Most of it's just designed to take your money. Everything you learn from us is a trading truth. And we don't expect you to just believe it's a trading truth. We want you to take what we say, drag it out in the light of day, and make sure it stands up to scrutiny. When I tell you the pullback to the BBC holds more often than it doesn't, that's a trading truth. When I tell you that price rallying up to a weekly zone will most likely find resistance, that's a truth. When price drops to a weekly trading zone, you'll most likely find support. Again, that's a truth. You got to separate fact from fiction. Facts change, but truth never does. So let's get into the smaller time frames. Start with the ES. Okay. The vertical line on the chart separates today, Monday, which is actually Sunday night / Monday, from Friday. This was the Friday high, and this was the closing. This was the high going into the close on Friday. This was the closing candle. And then last night at 6 p.m. Eastern, the markets gapped down drastically. And William B., I think that's what you were referring to in your private message to me in Telegram. See, the London Open is at 3 a.m. Eastern. Price had pulled back to the BBC. The pullback held, and off we go. Okay? So this was the gap. Now, I pointed out on Friday that there was a kind of an odd Picasso type head and shoulders This being the head, the shoulder, the shoulder. The neckline, of course, would be down here. It hasn't completely negated itself yet. Yeah, I think for the most part it has. So we're not pattern people. So we are technical traders. And while a pattern, like a head and shoulders pattern, can be considered a technical thing, we're just not pattern people. Okay. Now on Friday, I did draw in this little window of opportunity that filled once, filled twice. Before the close before we rallied into the close and then sold off just a bit. So last night, as I came home from the wedding, I posted the CTAs. 37.92 was the long number that you just saw. Right there. Okay. And from 37.92, the first move up was to 37.95. That's 3 points at $50 a point, $150 per contract traded. But remember what I said, once an alert triggers, there's a greater probability it's going to trigger again. So after giving you your goal for the day, plus 50 bucks, we dip back below the trigger, trigger again. And this time we make it up to 38.04 and a half. So we'll just call it 38.04. That would be 12 points at $50 a point. $600 per contract traded. Then price pulled back to the BBC and it triggered again up to 37.96 and a quarter. However, something's changed. Blue and climbing, which supports a long trade, has turned into red and falling, which represents resistance. And look what happened when price got to red and falling. Resistance. Pulled back to the BBC, the pullback held, made another run, resistance at red and falling. Pulled back to the BBC, made another run, pulled back and now making another run. You need to see red and falling turn to blue and climbing before you encounter being long, before you consider being long. This little double top right here on this 30-minute chart, that's potential resistance. That's potential resistance. That's potential resistance, which lines up with the Friday high, but it didn't take it out. So above that, okay, that's a great window of opportunity up here. If price can overcome this obstacle and this obstacle and this obstacle. For prices to rise requires financial commitment on the part of institutional buyers. Okay? For prices to fall, all that is required is for institutional buyers to take profit and stop buying. And bang. Now these are last week's weekly trading zones because the alerts that went out last night are based on last week's zones. The alerts that went out today, the logic alerts, are based on this week's zones. Tomorrow on the broadcast, I will have the current weekly zones on my charts. Okay? But look what happened on Friday. Okay? We got above the zone, finally. After support, got above the BBC, we got a leg, we got a retracement to the BBC, the pullback held. Leg, a retracement to the BBC. Leg, a retracement to the BBC. And then another leg, putting in the high on Friday. And then we got below the BBC, and where do we find support? Well, here's the zone. The reason I drew that window of opportunity where it was defined by this candle right here. If you don't understand that, book a one-on-one mentoring session. Even when you're on the trial, you're allowed to book a one-on-one mentoring session. Remember, the trial, there's no credit card required. For 5 consecutive trading days, we treat you just like a lifetime member. You have access to everything a lifetime member has, except the members only workshop on Thursday night. Unlimited one-on-one mentoring. You're not going to find that anywhere on the internet. Period. You're just not. Unless you have to pay some recurring fee or you have to pay for each mentoring session. Some people charge as much for one mentoring session as we charge for the whole lifetime passport. Does that mean what they have is better than what we have? No. They just have an inflated ego, and because people are willing to pay it, they charge it. You've heard the statement, whatever the market will bear. Desperate people will pay large sums of money for the secret. Here's the secret. There is no secret. You just have to learn how to read the chart. You have to understand how price flows. You have to learn to identify where obstacles are to your trade, long or short. And that's what we teach you. Okay? So we triggered, back below, trigger again, back below, but not all triggers created equal. Red and falling overhead. And it's kept the market in check. Now we're right back at the CTA. Now, what I do want you to understand is that from this pullback to the BBC right here, you had all this room to get your goal for the day before we got to the CTA. So the CTAs should first be viewed as a target. Once penetrated, they become an entry, but they will most likely trigger multiple times, just like you see right here. But not all triggers are created equal. Don't forget that part. On to the Dow. Here's where the market gapped lower at 6 p.m. Eastern last night. Ran up to the zone, pulled back to the BBC, the pullback held. Off we go, the pullback held. Off we go. And then we hit the CTA, 32,500. And the first candle took us up to 32,560. That's $300 per contract traded. And then we came back to the low was 32,503, so we didn't actually dip below, but we pulled back to the CTA number and then ran. So we really only had one trigger, and it took us all the way to the target. From 32,500 to 32,625, that's 125 points at $5 a point. Over $500 per contract traded. Then we get back below the trigger, trigger again. Notice the pullback held and the pullback held, but got red and falling overhead. That's a potential obstacle. In this case, price traded right through it. But the better trade is to wait for red and falling to turn back to blue and climbing, and then trade this pullback to the BBC. Boom. And it takes you right up to the trade to target and beyond. We're up to 32,711 at this point. On the Russell. Here's the gap lower open last night right to the BBC. That gap lower held. Leg retracement held. Leg retracement held. Leg, and we trigger 1814, and it takes us up to 1820. $300 per contract traded. If you've earned the right to trade 10 contracts, that's $3 grand. But you don't start trading 10 contracts when you become a member. You start out in SIM until you put together 10 consecutive days in a row, proving to yourself that you understand the methodology and the strategy before you put real money at risk. If you don't have enough patience and self-discipline to do that, you probably don't have enough patience and self-discipline to become a trader. I'm sorry. If you want help with patience and self-discipline, I will be happy to help you. Just book a mentoring session. Price pulls back to the VBC, the pullback holds. Off we go. But red and falling shows up, and we did spike it quite a bit. But we don't want to trade into what we know, even though this time it worked out, okay? We don't want to trade into what is an obvious potential obstacle. We get back below the VBC, we pull up to the VBC, and the pull back holds, or the pull up holds. Holds more often than not. Leg to the downside, pull back up. Now, if price cannot close this current 30-minute candle in 19 minutes, if this candle can't close above the VBC, then we anticipate another leg to the downside. If we close above the VBC, then we anticipate a leg up to that high right there. And if we get through that high, we'll trigger with blue and climbing, and we'll expect to run up to that high. Not rocket science. You just got to understand how price flows from support to resistance, over and over, again and again. In Q, gap lower last night on the open. Okay, now this little move down here, I had not put out the CTAs at that point. Okay, so just want to make sure everybody understands that, because I didn't get them out until 11:55 p.m. Eastern last night. Okay. Now, where's my indicators? Oh boy, I think this is the new fancy one. No, it's not. Yeah, it is. Okay, I got to change it, because I keep my VBC green. I don't know, I accidentally deleted what I had fixed, but don't worry. I'll show you tomorrow. So price opens here after the gap lower open, closes the gap, pulls back to the VBC, makes a run. He triggers here and runs all the way up to here, 944. 20 points, $20 a point, $400 per contract traded. Back below the trigger, here we go again. From 925 to 972. It's almost $1,000 per contract traded. Back below the trigger, up we go again. Back below the trigger, but now we got red and falling. Okay. Now this candle is triggering, but be patient. Let red and falling turn to blue and climbing. Clear these highs. You got all this room up here to be long. But don't forget, we're fighting resistance times 3, 4, 5, and 6 on the S&P daily chart. The S&P is the bellwether. Okay. The other indices will eventually follow whatever the S&P does. That's, again, it's just how markets work. So I'm not saying you can't be in this trade, but you should be cautious in this trade. From 925, we've traveled up to 940. 15 points, $20 a point. Okay. All right, that's all of the indices. Let's go to crude oil. Gap lower open, 6 p.m. Eastern last night. We pull up to the BBC, the pullback holds. We get a leg to the downside. Then we consolidate at the BBC. Red and falling turns to blue and climbing, and here we go. From 92.25, we make it up to 92.38. It's $130 per contract traded. Back below the trigger. Up we go again to 92.70. That's $450 per contract traded. Pull back to the BBC. The pullback holds. Off we go again. But we got red and falling, so you got to be very careful here. Then we dip back below the trigger, and we go up with blue and climbing from 92.25 to 93.75. Okay, let me explain. 92.25 to 93.25, that's $1,000 per contract traded. If we were to make it up to 94.25, that'd be $2,000 per contract traded. But remember, once an alert triggers, there's a greater probability of it triggering multiple times. And so right now, all I see is price trying to get below the trigger so it can trigger again. It's a red candle. But I'm not going to trade based on what I think will happen. I'm going to wait to see it happen. In other words, I got to see a green candle start printing. And then I know that this is potential resistance, this is potential resistance, this is potential resistance, and this is potential resistance. Moving on to gold. Just kind of flattened sideways. 1681 was the trigger. We triggered it. Ran up to 83.60. That's $260 per contract traded. Back below the trigger. Up we go again to 85.60. That's $460 per contract traded. Notice all these pullbacks to the BBC hold. Okay. You got red and falling right here at the trigger. So I would not go long until we take out that high, and that high. Even though we're sitting on top of the BBC in last week's zone, there's a bullish cross here, okay? Now I want you to really pay attention to this. See this bullish cross? Blue line crosses above the green line. Where did the market find support? At the bullish cross. Where did the market find support? At the previous bullish cross. Anytime a bullish cross leads to an extended move, or a bearish cross leads to an extended move, the first time price revisits that area, in the case of a bullish cross, will almost always become support. Look at that cross, support, support. Not magic, just logic. Silver, 2075 was the CTA. There's the gap lower open to the BBC. Pushed up to the zone. Pull back to the BBC. Made a run. 2075 took us up to 2086. Now with silver, 2 pennies is $100. So from 75 to 86, that's 11 pennies. $550 per contract traded. Back below the trigger, off we go again. From 2075 to 2108. 25 and 8 would be 33 pennies. We'll call it $1,600 per contract traded. A 10 contract trader, that's a $16,000 move. But don't put the cart before the horse. It's awkward for both the cart and the horse. Follow the rules, follow the blueprint. Start in sim, put together 10 consecutive days in a row. Go live with one contract, and then with real money increase your account balance by $2,000, and then use your profit to add a second contract. The blueprint will always tell you when it's time to add another contract, but you only add one at a time, and you only add with profit you earn in the market. If you're willing to do that, actually follow the rules, okay? It decreases greatly the likelihood of you blowing up another account, which is your goal, I assume. All right, Euro. We had a trigger here and a logic alert, which got thwarted. Pulled back to the BBC and the WTZ. See, there's that same. I drew this on Friday, and we filled it to the tick and beyond. So we gap lower last night to the zone, consolidate along the zone, make a run, doesn't work out, pull back to the BBC, and then it works out, and then some. Pull back to the zone, and we move even higher. Okay. All right. That brings us back to the daily chart. We're right at the step line. There's the daily BBC, the green line. So how we close today is important. But even if we close higher than we are now, resistance, 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 resistance. Buyers have to be, institutional buyers have to be really committed to push this thing higher. Not saying they can't do it, just saying they're going to have to work hard and commit a lot of money. And with tomorrow, when those returns from the midterm elections start coming in tomorrow night, these markets are probably going to go nuts. So, you're probably better off just watching TV and maybe watching your monitor on your laptop. I don't recommend you get involved and try to trade every hook and turn of the market. Unless you have a really huge account and you have a lot of experience at trading and you can handle a huge drawdown. Even then, I don't think it's the best thing to do. Let the results come in. Let the market settle down. Let them get back to their normal rhythm. Okay? If you want to become a member of our lifetime family or a lifetime member of our family, you need a CFRN passport. It is our all-access pass to everything we do, everything we've ever done, and whatever we do in the future. There are no recurring fees. There's no new shiny objects to buy every other week. There's no nonsense. Once you become a lifetime member, you're a member for life, and you have lifetime access to the live training room. 9 out of 10 traders fail just because they don't have somebody to teach them how to trade. I bought all these books and I watched all these YouTube videos. That's no substitute for a real teacher. Okay. Passport holders have unlimited access to one-on-one mentoring. The methodology and strategy we teach you, the indicators you own for life, are fluid across all markets and all time frames. Futures, individual stocks, crypto, Forex. You don't have to tweak anything. You don't have to curve fit anything. You just plop the indicators on Apple, plop them on Google, plop them on Bitcoin, plop them on Forex, because our indicators are built on the underlying principles of which markets operate. And also you get the Logic 247 around-the-clock alerts, the concierge trade alerts. It really is everything a trader needs, all under one roof at one low price. Here's where you get your passport, eminifuturestrading.com. If you have any questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Let's wrap this up with our good word for the day. Friday we talked about you must care about others. Today we're going to start a multi-part series on problem solving. That's something we all got, right? Problems? Okay. 2 Corinthians 4:9. When we are knocked down, we get up again. In fact, there was a great song in the 80s, I can't remember the name. Or I get knocked down, I get back up again. Do you remember? Yeah. Back in the days when MTV was birthed. I guess you got to be old enough to understand that. Anyway, every problem you face in life introduces you to yourself. You really need to think about that. Every problem you face in life introduces you to yourself. It shows you how you think and what you're made of. People basically respond to problems in three ways. Number one, the most common, they refuse to accept them. Number two, they accept them and then endure them. Or number three, they accept them and try to improve things. So which of the three people are you? Now, Paul was a problem solver. He knew that with God on his side, he would prevail. He wrote in 2 Corinthians 4:7, we are like clay jars in which this treasure is stored. The real power comes from God, not from us. We often suffer, but we are never crushed. Even when we don't know what to do, we never give up. In times of trouble, God is with us. And when we are knocked down, we get up again. So when it comes to having problems, what should you do? Number one, anticipate them. Since problems are unavoidable, prepare for them spiritually, mentally, and emotionally. If you pray for God's best and anticipate Satan's worst, you will find yourself in a good position to solve the problems that come your way. Number two, see the big picture. You can't afford to be overcome by emotion or get bogged down and lose sight of what's important. And number three, handle one thing at a time. Richard Sloma said, never try to solve all the problems at once. Make them line up for you one by one in order of importance. And if you're facing lots of problems, try to solve the one you're working on before moving on to the next one. Tomorrow will be part 2. Gary H. He's our musical historian. Chumbawamba. Tub Thumping from the mid-90s. That's the song I was trying to remember. When I get knocked down, I get up again. Thank you, Gary. All right. Thanks so much for tuning in, guys. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.